Well, that's the big cue for the day today on your screen. It's the day of the RBI Monetary Policy Committee meet. Widely expected that there will be no rate action, but perhaps the RBI Governor and the Monetary Policy Committee might change their stance to neutral. That's the biggest cue, and we'll get to know the answer of what is there on the mind of the Monetary Policy Committee as well as the RBI Governor at 11:45 a.m. today. Well, Mangalam, good morning. So that's the biggest cue for the day today.
The biggest cue for the day today, and Shaktikanta Das's first FOMC or India's FOMC, so to say. That is something we'll be watching out for. More importantly, because I'm personally very excited for this, and I'm not kidding. Why am I excited? Because, you know, it'll be a thin, tight rope that the RBI governor this time will have to walk. The budget was that, you know, between fiscal prudence and populism, and now after the largest that the government has announced in the budget, the inflation is low. Let's see where it goes. Yes, so we'll start off with all the top stories that we're tracking this morning, and then we kickstart the show with individual stories that we're tracking. Wall Street ends lower as Trump's State of the Union offers few details on the economic agenda. S&P 500 snaps 5-day losing streak. The Asian markets mixed in early morning trade, the ones which are open.
RBI Governor Shaktikanta Das to present his maiden policy today. 90% of the respondents of the cnbc TV 18 poll expect a status quo on repo rate, but all respondents believe that the central bank will change its stance to neutral.
Vodafone Idea reports a whopping 5,000 crore rupees loss in its second quarterly results since the merger of Vodafone India with Idea. Revenue also misses street view, but EBITDA and margins beat expectations.
And in big earnings today, Tata Motors standalone numbers expected to be weak, while JLR earnings to see recovery quarter on quarter due to improvement in volumes.
All right, first up, a check at the Asian markets. Before we do that, remember the Hang Seng, Shanghai, Taiwan Straits, even Singapore are shut for trade today. So we have two indices which are working, which is the Japanese index as well as the Korean index. They're mixed following the declines coming in on Wall Street. Wall Street snapped about a 5-day rally, mild profit taking post Trump's State of the Union address. The Nikkei is the one which is down about 0.8%, and this despite SoftBank being higher by about 12%. Remember, SoftBank announced the largest ever buyback of close to around 600 billion yen, which is about $5.5 billion, and that stock was higher by about 12%. The Nikkei is still lower. The SGX Nifty currently indicates a mild cut, but let's see whether the rates come by or not. That's primarily on account of very low volumes. The Korean index also in the red. For our markets, remember yesterday we reconquered the 11,000 mark, but we have a fair amount of cues to work with today. The first is that crude is now back above $62.5 per barrel. Secondly, we have the RBI policy meet. And thirdly, there's been a fair amount of put writing at 11,000. Let's see whether that holds or not.
Okay, so that was about how the screen looks as far as the Asian markets go. But on Wall Street, the stocks closed lower with the S&P 500 snapping a 5-day winning streak after President Donald Trump's State of the Union address offered few details on his economic agenda. The Dow Jones closed 21 points lower, ending a 3-day winning streak, and the S&P 500 also fell around 0.2%, snapping a 5-day gaining streak. The Nasdaq Composite, that one also declined by around 0.3%. CNBC's Contessa Brewer gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks ending slightly lower. The Dow off 21 points, the S&P down 6, and the Nasdaq lower by 26. The U.S. trade deficit fell to just a little more than $49 billion in November, the first decline after 5 straight months of increases. The decline was largely due to a slide in imports, which fell by nearly 3% for the month. President Donald Trump has made closing the gap a major priority. Sticking with the trade front, Treasury Secretary Steven Mnuchin tells CNBC officials are, quote, working around the clock on a trade deal with China. The U.S. and China are set to hold another round of negotiations next week in Beijing. The world's largest economies are working to strike a deal ahead of a March 1st deadline when the U.S. could impose new tariffs on Chinese goods. Shares of General Motors are higher after reporting better than expected fourth quarter earnings this morning. Profits at the automaker were fueled by higher truck sales. GM recently cut production of slower selling models and announced layoffs last year as part of a corporate restructuring. That's the action from the United States market. I'll send it back to you in Mumbai.
All right, so that's what took place on United States yesterday. But on that note, let's hear out some opinion coming in on the US economy and the market from Goldman Sachs as well as Citi.
The major issues that fund managers have been focused on right now is the Fed, which has clearly been supportive in terms of its indications, keeping rates roughly on hold for this year. Questions a lot about China in terms of the trade, and then earnings. Those are three big topics that have been subject of our conversations. We have rates, basically the economy is growing at a modest pace, still strong, still growing roughly 2.5%. Real GDP growth for this year, and the fact is rates have been remaining low. That's a perfect sort of cocktail for the equity investors. You have policy rates can be low, and you've had long rates staying relatively well anchored, and that's basically supportive of a equity market that generally moves higher, which is really the story around earnings.
I think most people anticipate that there will be some form of agreement, maybe not be a full-fledged trade agreement, but some sort of arrangement to kind of defer the worst or the most calamitous consequences of a full-out trade war. Having said that, that tends to be the expectation in the markets. We were in Asia a couple of weeks ago talking to investors, talk to investors in the States all the time. I'll be in Europe next week hearing, and I'm assuming I'm going to hear the same thing. There's already an anticipation that there will be some form of a deal, not a perfect deal, but something to avoid the bad outcomes. However, investors are clearly focused. China's trying very desperately to stimulate economic activity, to grow it. We think there is some upward pressure on commodity prices that are going to result from that.
Okay, let's now go across to a CNBC exclusive. Former Federal Reserve Chair Janet Yellen said that the central bank may have to cut interest rates if a global growth slowdown starts to impact the United States. Here's a slice of that conversation she had with Steve Leisman.
I think the president has a right to express views, but there was a long history. I think it began with President Clinton, went through the Bush and Obama administrations of absolutely no comments by the president on the Fed. And, of course, throughout, there were always communications between the Fed and the White House. I had regular meetings with Secretary Lew and Secretary Mnuchin. I know that Chair Powell also has those meetings. So there is ongoing communication with members of the president's economic team and occasionally the president about the economy. But it is important for the Fed to be viewed as independent, and I worry that the comments threaten public confidence.
What risks do you see, and how do you assess them?
Well, we are seeing slowing global growth. The data from China have been reasonably weak, and the European data has also come in weaker than I think had been expected. So there are those risks. There are risks stemming from trade policy, from Brexit, and uncertainties around various political decision-making. We've also seen, of course, a tightening of financial conditions. And for a long time, as the Fed raised short-term rates, indices of overall financial conditions were moving in the other direction. That's now changed, and we are seeing a tightening of financial conditions. So there are some things pulling down growth and less support this year than last from fiscal policy. But consumer spending is still 2/3 of all spending in the U.S. economy, and with slightly higher wage gains and strong job market performance, low debt burdens, I think consumers are in good shape to carry forward growth in 2019.
All right, then let's shift across the Atlantic. Then in the European region, the markets ended mixed, reacting to corporate earnings, and most of them were actually absolutely flat, barring the German index, which was lower by about 0.4%. And that was primarily because across the European board, it was auto stocks which did not do too well. We also got the German industrial orders in December, which were lower, negatively impacted by a global slowdown and rising trade barriers. But it was all about individual stocks, We had French defense company Dassault Systems that was higher by about 10% in yesterday's trading session after reporting a stronger sales in its quarterly earnings, and that is what supported the French index, which was otherwise absolutely flat. The British index was supported by Clydesdale Bank, which was higher by about 14% as well. So both those indices absolutely flat. The German index lower on account of weaker macro data and lower auto stocks in yesterday's session.
Okay, so it was a bit of red across Europe, as well as when you look at the US markets, they also saw some profit booking yesterday. But on that note, we'll slip into a short break. Up next, we'll get you all the cues and news you need to know for trade this morning. Stay tuned.
Back home on the last trade was a good day of trade as far as the frontline indices are concerned. The key indices gained almost 1%. The Nifty and the Sensex ended at 4-month high. Nifty reclaimed that 11,000 mark, whereas the Sensex ended just shy of 37,000. The mid-cap index, while underperformed, it did recover 200 points from the low point of the day to end in the green. A whole host of cues to work with in today's trading session, and for all of them, we have Ekta this morning. Morning, Ekta.
Hi, Manglam. Morning. Well, it turned out actually to be a good session for us yesterday. So, the Nifty and the Sensex were at 4-month highs. The Nifty managed to scale 11,000 on an intraday basis. And we had an FII and DII figure which came in, which was quite strong. So both of them bought. The gross figures weren't that high. And the FIIs bought around 695 odd crores. And the DIIs also net bought around over 500 odd crores. So that was actually a very positive indicator in terms of the sentiment for the markets. However, there are only few stocks which are leading the Nifty gains at this point in time. So, for example, we have Reliance Industries, Infosys, Axis, HCL Tech, TechM, a couple of these handful stocks which are really leading or letting or allowing the index to be at these 11,000 levels. So that gives you a sense in terms of how narrowed or skewed the market is in terms of specific stocks. But overall, in terms of what we can expect today, the US markets were largely lower yesterday. So it was, reacting to the State of Union address, etc. Asia is also a bit sluggish this morning. And in terms of another important cue, we have Brent crude, which is a little above $62 per barrel. So net-net, the SGX is currently indicating that it could be a little bit of a softer start for us. So we could just about be hovering at around that 11,000 mark. But remember, it's been a strong run for us. So even if there is some amount of consolidation or profit booking which comes into the markets, it'll be par for course. Now, the big important cue today, and I'm coming to that, is the RBI credit policy, first policy of 2019, first policy under the new RBI governor as well. And the street is expecting a change in stance and maybe possibility of a rate cut on the outset. Bond yields have pretty much factored in, some hardening since the budget because of the fiscal deficit, etc. So don't expect too much on that. Weekly Bank Nifty options expiry as well. A lot of result reactions. Vodafone, Cummins, Indraprastha Gas, Manappuram, a lot of results today. Tata Motors, Grasim, Aurobindo, just to name a few.
Okay, Ekta, so you mentioned a whole host of stocks that might be reacting to earnings, but what is the other list of stocks that you're watching out for?
Well, in terms of a couple of result reactions, there's Vodafone, net loss of around 5,000 odd crores for that one. We also have, Cummins, which came out with numbers, and IGL, which will be reacting to numbers as well. Separately, a couple of others just to talk about. Jindal Stainless, net profit was down 61%. Future Consumer was a net loss of 5.4 crores. TBZ, the profit was up 50% this quarter, year on year. I mean, low base, but nonetheless. Manappuram Finance net profit was up 44%. Himmat Singha net profit was just about higher by around 2% Kaya net loss was lower on a year-on-year basis, so 0.4 crores, maybe just about broke even. And a couple of other result reactions include UFO Movies, Fortis Malar, Vimta Labs. And I'd be watching out for a couple of stocks such as Cipla as well as Lupin after the commentary which came out from the management post-markets yesterday.
All right, Ekta, thanks a lot for that. So we'll keep an eye out on all those stocks and cues. But let's get in some important opinion coming in from the big bull himself, Rakesh Jhunjhunwala, speaking at the 10th edition of the TiCon Mumbai. The market veteran said that he believes the BJP will surprise on the upside with its seat tally in the 2019 elections. Also added that he would like Narendra Modi to continue as the Prime Minister. Speaking on the market, he continues to be bullish on pharma as well as banking stocks.
I would very much like that Mr. Modi becomes the Prime Minister of this country again. And I think my personal judgment at this moment says the BJP tally will surprise on the upside. And you know what is this? UP mein haan 40 aayegi, ek bolega nahi, 15 is more appropriate. What is the basis? Right? Could be, I've got so many lists here, Maharashtra 48, how much BJP will get, how much, no basis anything. So, but I feel BJP will come. And second thing I want to tell you, because India grows not because of politicians, but in spite of them. There will be some shocks, people will bear it. I was thinking about it, then I read Sharda scam 17,000 crores, Rose scam 20,000 crores. It's all gone to retail investors only. So de diya.
So one more.
Yeah, one more, what else? It's a scam only. Every society has gone through it. No? Imagine a Madoff in America, $5-6 billion, $8 billion. And the wisest, he was a Jew, and the wisest Jews were his investors. So it's all part of financial markets. Scams, exposes. Overall, if you look as an investor, I'm not troubled at all by what's happened here. The index was 4,700 in 2013. It's today at 11,000, right? What is there to be disappointed about? You got a 15-16% compounded return. At the moment, I'm very bullish on pharma and banking.
Okay. Well, the Reserve Bank will be announcing the 6th bi-monthly monetary policy statement today. Now, this will be Governor Shaktikanta Das's first policy announcement after he took charge in December. The last 3 policies have really maintained the status quo on the repo rate. Will it be any different this time around? Let's go across to Lata Venkatesh for what can we expect today.
This time, as we enter the monetary policy, clearly the odds are divided. It can go either ways. First, I would root for a rate cut because there are some very sound data reasons. Inflation readings. For the next 2 to 3 quarters, the expectations are that inflation will be at the most at 4%, for a better part below 4%. And of course, you know, even the RBI model has not been very good. The last 2 years average has been largely below 4%. Again, looking forward, let's not look backward. Global factors are indicating benign. The Fed and the ECB are all pointing to lower growth and hence lower inflation. The Indian debt markets are still hurting, and they can do with a little bit of help. So a rate cut will certainly be helpful. Now is the time really when you can find space for a rate cut. But there are skeptics. And look at that, 90% of the respondents in CNBC TV 18 poll said that they expect a status quo, no rate cut. Our own Citizens Monetary Policy Committee also voted 3:2 for a no cut. And their reasons are, first, fiscal stimulus. Why give a monetary stimulus when there is already a fiscal stimulus? They believe that the budget, 3.4%, is not to be believed. The tax estimates are, overdone. And then, fiscal stimulus is also coming from things like, the loans hidden in FCI. If the RBI gives a big dividend, that will be yet another fiscal stimulus. So also that's a blow to RBI's credibility. An important point is the RBI stance until the previous policy was calibrated tightening, and the previous governor said cuts are off the table. Now to change stance and give a cut at the same time, especially when core inflation is still high. Core is non-food, non-fuel inflation. That is still very high at 5.7%. So it is quite difficult for the governor to convince his deputy governor and ED to vote in favor of a cut this early. Maybe they will have to wait. That's what many people believe. And finally, the impact. Even if there is a cut, yields will at most fall by about 10 basis points to 7.35 on the 10-year. If you don't get a cut, they will rise at the most 10 basis points to 7.65. And none of this is going to get translated to the NBFCs or the corporate sector because of the tightness in the debt market. So basically, not so much at stake, I would say.
All right, Lata, thanks a lot for that. So not so much at stake. We'll keep an eye out on how this pans out, a cliffhanger of a monetary policy. What we do is take a short break, come back, and we discuss earnings. Vodafone Idea reported a 5,000 crore rupee loss. More highlights when we return.